John-Mekwa. She's still in D.C. and she's been covering the IMF World Bank annual meeting, sending us informative reports. She joins us now for a review. Great to have you, Uni.
Hi, Laddie. Good to be here. Well, I can't help but notice that the market, the NGX, has gone up to 99,000 in my absence. I don't know if to say that's good news or heartbreaking. I would have loved to see it, but I hope it stays there until I'm back.
Yes, because we're seeing a little weakness right now, but who knows, it might change, by the close of trade today, but we're still holding that 99,000 points. But away from the markets now, and I know there's a debate on tackling the global economy's low growth, but high debt, combination. That was, highlighted there with most of the conversations there. But what did you make of what was said, by the IMF?
So, Laddie, it's a lot of conversation right here, as you would imagine. Usually that's what it is. But, just as I said, when we had this conversation earlier in the week, things are changing. The fragmented trade relations is topping the agenda and posing new challenges to global financial institutions. And it does seem like even the low-income countries are getting more voices and asking for even more, which is where the reform comes in. And then, so you see a lot of low-income countries represented here. Then they didn't come all the way here, just to maybe, I haven't heard of debt forgiveness, which is one thing that used to be common. So even though you do have debt distress in some countries, especially sub-Saharan African and those African countries, I don't hear a lot of begging for debt to be forgiven. Now, what it seems, the reform that they're talking about now is how to make the burden or even the accumulation of the debt even easier. So there are talks about interest rates of loans to be gotten and funding and financing given from both the IMF and the World Bank. So if these are poor countries, why burden them with so much interest rates and also penalties for not meeting up with some financial obligations? So these are the kind of reforms that are being put on the table, and we expect that will make a part of the reform because the calculation is that by this time next year, by the next annual meeting, we would have a major guide and direction as to the new phase of both IMF and the World Bank in their restructuring and reform process. But Ladi, that's only on the one side. Countries are also using this opportunity to try to connect, to attract capital and funding to their domestic economy. Nigeria is one of that. So there was a meeting 2 days ago where Nigeria's economic managers, the Minister of Finance and Coordinating Minister of the Economy, Mr. Wale, as well as Nigeria's central bank governor, they had representative of investment banks and countries, and they sought to allay any fear they might have. I mean, we know the reality in Nigeria with the current economic reforms going on, subsidy removal and subsidy in one way or the other, not just on petrol, but you also have the one on foreign exchange. Well, the minister told us that it's finally been removed as of October the 2nd, so not May 29, as the president had said. So all of this obviously has sent some shocks and fears and uncertainty into the mind of investors outside the country. So that meeting was actually to try to calm nerves and explain some of the things that may have been achieved up till now.
Right.
And also give investors certainty that, if you come to Nigeria, policy and all, you are safe.
Right. I know the investors need all the care right now, to make them feel, comfortable. I know other central bankers were there, and I know you had a chat with Mr. Garang. He's the governor of the Bank of South Sudan. That's James Alik Garang. Let's listen to what played out there.
The key theme this time around focused on what needs to be done to secure the soft landing. That means after all the crisis, from the pandemic, from the regional and global tension that we're seeing today, and from the wars that we see in Europe and the Middle East, whether the economic outlook has turned out to be what it was perceived 3 years ago. And what the discussion today is around that the situation is such that the global economy, the growth, is resilient and improving, but not even. So that means there are some regions, there are some countries where the economic growth prospects are very positive, but there are also other regions where the growth dynamics are not favorable. So that's the headline message. The second headline message is on inflation. Inflation is trending down generally on the average, but it's not trending down everywhere. If we bring it down to the region, let's say in Sub-Saharan Africa, inflation remains very high in most places. On the issue of the financial sector, at the global level, risks have shifted from places where they used not to be to the place where they are today. Let's say in the real estate. This has to do, for example, with Asia, including China. So there are pockets of vulnerabilities in the financial sector that need to be looked at. Now there are major challenges, from climate change to geopolitical tension to the wars to the few outbreaks of diseases such as the chicken pox, the smallpox, for example, and a few others, and the volatility that we see in the financial sector, from asset prices to commodities prices. So those are the headline messages, some of which are challenges. Now, what are the prepared policy options that are laid out there for policymakers to look at? There are a range of policy options across 4 broad areas: one on fiscal policy, one on monetary policy, on financial sector policy, on structural policy. Without going in depth, I will just highlight a few of those. On the fiscal side, the key recommendations are a need for authorities to build buffers, to create fiscal space, and to also to ensure debt sustainability. On the monetary policy front, the policy push is on the need to recalibrate and communicate monetary policy, and at the same time, do everything possible within our powers to ensure that we mitigate the volatility that we see in the foreign exchange market. Then finally, of course, along this line is to protect the central bank autonomy, because when central banks are independent, they do things that are in the best interest of everyone. And then on the structural front, the push has been on the need to uplift or improve productivity, attract capital, and then ensure that we move along the same line of digitalizing or strengthening the digital processes, and then of course also work on policies that are there to ensure green transition. On the side of the financial sector, the key message has been to strengthen resilience and stand ready to respond when those pockets of vulnerabilities do arise. As I have said earlier, traditionally, you have sectors where risks are, but today some risks have shifted to the real sector, to the housing sector, and more so in emerging economies. These are the headline challenges and the headline messages. Okay, now, please. For Africa, the biggest development, the biggest positive news so far has been the addition of a third share at the side of the IMF. Sub-Saharan Africa, I could say, since 1979, on the IMF side, has been pushing to increase our voice, to increase our representation, and to sit at the table. And one of those has been the endorsement by the IMF board during this annual meeting that by November 5th, Africa will have 3 shares. There will be Group 1, Group 2, and Group 3. Traditionally, they used to be clustered along the Francophone and English speaking. But with the addition of third share, it's not so much about languages now, it's so much about the region. So we have the West Africa group, the Southern Africa group, and the Central and East Africa group. So these are the 3 These are the three shares. So we are very happy that our call, a long-standing call, for almost now, almost 50 years, we have been calling for a seat, one more seat to be added. And this time, African ministers of finance and central bank governors were able to push this, and it has gone through. So this is one of the biggest achievements that has happened so far.
And yes, that was the governor of the Bank of South Sudan, James Ali Garang. So definitely other central bankers and ministers of finance had a lot to say, at the meeting. So talk to me about if you're gauging the pulse of investors there, their reaction to, most of these other countries.
Well, Ladi, first of all, I would like to just, comment a bit about what the South Sudan Bank governor talked about, which is victory for Africa, gaining an additional chair, so that means an additional voice. So before now, we know that there's been talks as in is Africa, or at least the low-income income countries, are they being fairly treated by the two Bretton Woods institutions? And the notion or the perspective had been that because you don't have enough voice, then how can you be heard? So obviously it's a congratulation for Africa with this extra quota seat, so you have more representation right there at the meetings, you have more voices and all of that. And remember, I also did tell you that one of the reforms that is being asked for is the issue of a quota, even among member countries. So that's on the one side. But there's also still the issue of rating, credit rating. I remember in Marrakesh, the last annual meeting, that came up. And then they were like, so who are those who are rating the African countries? What information are they exposed to? How do they get the information? How are we sure that the information they're sharing is representing the reality? I mean, these are representative of the Western world. How much do they really know to rate the African countries? So that is still a battle that hasn't been won yet by the African countries. But I mean, with the reforms going on, consultations are going on, perhaps by this time next year, we hope to hear good news. Now, about other countries that are here and investment polls. Well, I tell you, Ladi, we will only know the result of that in maybe the next few months. And it's a global thing now that the world is not in a very rich position. The tension, the war in Ukraine, some of the after effects of COVID-19 is still hitting a country. So even though IMF has said inflation has peaked, and then we expect to see a deceleration, we do know in the low-income countries that, what's inflation in Nigeria? We had 2 months of a reduction, but we are back on the high trend because of the power. And that also brings the issue of subsidy back into the conversation. So we saw that World Bank said that Nigeria lost about over 13 trillion naira because of foreign exchange subsidy. But guess the other side of the conversation. Even in America, there's still subsidy, especially in agriculture. So if the low-income countries are told to eradicate subsidy, what happens to the people in the lower cadre of the economy? How can the government give them a buffer? Everybody's talking about social security, social welfare, and all of that. How can the government, for instance, in a country like Nigeria, where would the savings from the subsidy go to? How will it come back, to the average man on the street? So, Aladi, it's a whole lot going on here. And even though the meeting is ending, I know that the conversations will continue. And then this should feed into what will make up the new phase of IMF and World Bank as they turn 88 decades of operations. Ladi, they have a whole lot of responsibility, many eyes looking up to them. And the issue of financial fairness and treatment is a big one that both Bretton Woods institutions will have to deal with.
Right, and hopefully after all of these conversations, most of the countries calling for fairness and can actually see, that fairness, that they're searching for. And With all this talk about, the IMF raising alarm about, global debt. So we see it's not just about, your country or where you're from. It's now, debt has become a global, issue at this time. But at the end
Yes,
of the day, it is what it is. The debt
it
is
is.
rising, and, we need to also see development to match, most of this debt.
Yeah, Ladi. So the issue of debt also, so we've seen a bit of reform happen in, I talked about the rates earlier. We've seen a bit of reform that has given it some buffer to the very indebted countries. We've seen that happen. The rates have been reduced. We've seen STR, which cost them even less, and all of that. But I mean, I think that the countries will also have to look inwards. The CSOs, some of the CSOs who are here talking about the issue of debt, are saying, okay, so sometimes information about those loans are not shared. We do not know what those funds are supposed to be used for. Can we measure what, if they are really used for what they're supposed to? So you also talk about issue of leakages, even among the debt-stressed countries. So it's not just about asking for debt forgiveness or asking for help. What about domestic funding? What about, they're talking about increasing taxes and taxing the capital of the rich more and all of that. But even after getting the revenue from those taxes, how do we monitor the use of it? Where is accountability and transparency? For a lot of African countries, the issue of leakages and lack of transparency is a major one that draws on the benefits of taxation and also puts the country in a part of debt stress. That's another observation, Ladi, that
Right.
countries also have to look inwards and not just, put everything on the financial institutions.
Right. Yeah, definitely. And there's so much to unpack there. And great reporting as usual. And I know you'll be back soon. Don't forget my gift.
You want chocolate?
Whatever it is, I'll take it. Thank you so much, Ini, for giving
All
us
right.
all those details.
Well done, Ladi.